is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Linder. Happy Friday out there. Hope you guys have plans for the weekend. You made it through the week fine, and you have plans for the weekend. Today is going to be kind of a grab bag show. Trump has stolen the news headlines over the last few days. You guys probably all know that he has been convicted of these felony charges in a very questionable case. But he also, after this case, he's raised $39 million in campaign contributions and a lot of Bitcoin contributions. David Bailey is out there talking about how many Bitcoins that he has raised. So that's taken a lot of the headlines. Bitcoin price has been kind of lackluster. We're going to take a look at the price, talk about that a little bit. Then I wanted to go over yesterday's post that I made for Bitcoin Magazine Pro. It was a free post for everybody, so just going to go through that, look at some cosmic charts of what we can expect perhaps in this cycle and in the next month or two coming up very, very shortly. Also, there's been some interesting activity on chain. We're going to take a look at some withdrawals from Kraken, Bitcoin balances on the exchanges, and transaction totals measured in USD. There has been some action there. So lots of kind of all over the place content here, but going to try to weave a cohesive narrative. So let me share my screen and we'll get into it. Bitcoinandmarkets.com is the website. Check it out. Go there to sign up for all of my content. I have some big announcements coming up here in the near future. So make sure you guys are subscribed over there on Bitcoinandmarkets.com. Let's take a look at some price charts first. Let's just go into the price, because that's why a lot of you guys are here. Bitcoin price first, then we'll look at some commodities. So this is the weekly chart, and we're down on the week now about 1%. But if we go to the daily, you can see we're kind of consolidating in the same range that we've been in since early March. And funny enough, this was the level that I pointed out back then, this closing candle on March 4th. And we are right on that level still. Can you believe it? If you guys are been following my content, I was hammering on this specific level for months, probably through all the way up through the end of April. And we are right back there again. It's amazing that we've been at this exact spot for this long. People are starting to get bored. The Ethereum ETFs might have brought some attention back into the space, but overall, people are bored. The inscriptions, the number of inscriptions are down. The number of runes transactions are down to near their lows. So that means that there's not a lot of speculative activity, not a lot of speculative interest in the space right now. But we are seeing some big moves on chain for Bitcoin, specifically with amount of daily transactions. And we'll get to that in a second. But first, that's what's going on with Bitcoin. Oh, and let me bring up the moving averages. This is the 50-day in blue and the 20-day in gray. And you can see we're really trying to hold on to that 20-day. If you bring the B bands up, you can see the B bands. The center line is also the 20 simple moving average. That's the standard settings. And so we're trying to hold the midline of the B bands to stay bullish, and the 20 moving average on the daily. We'll see where we close today. But let's take a look at some other things. So dollar, if you guys are just finding my content, I would have been a dollar bull this whole time, going all the way through COVID and all the stimulus and everything. People were saying we're going to destroy the dollar, we're going to destroy the dollar. And I'm like, no, the dollar is going to get stronger. Okay. The way that the system is set up as credit-based money, the end of a credit bubble is not inflationary. The end of a credit bubble is deflationary. And so that is what we're going to get. The dollar is going to continue to strengthen versus other currencies in this era. And I called for to be stuck in a range. Let me get these moving averages off. I did call to be stuck in a range. I thought the range would be higher than this. So, when we were up here, we did hit. So if we zoom out a little bit more, I call this top pretty close because I took this and I measured down to here. Let me try to get it exact as I can. And I said, okay, the 1618 extension right here at 111. I think it was I thought it was 112, but 111. And so I said, okay, it's probably going to stop there. Well, it shot past it, but that is pretty much the neighborhood where it stopped this move. And I thought it would get into a box like this, something up like this, staying above this other level back here, but being in a range here. Of course, as it turned out, it's now in a range down in a lower spot between 100 and 110, which I guess is more round numbers, so that makes a little bit more sense. But we are coiling here on the DXY, and the next move, it could be lower. Okay, now I'm sounding like Brett Johnson. It could go lower, but as this coils, and as we go into recession and all of that stuff, the dollar should rally. The dollar should rally. Okay. Next chart, let's take a look at the Japanese yen. It came out that they spent like $62 billion to protect the yen, and that was like up here, at the top. They were able to get it to come down, retest the high. I mean, people that don't believe in TA, and I don't think it's magic or anything, but just look at this. High here, resistance right here, and then support right here. 151.94. That is not coincidence, people. That's the importance of certain price levels. Shelling points on the chart. That's what TA is. It's just a bunch of shelling points. If you don't know, shelling points are just things that stand out, things that capture your attention. And traders will use these shelling points to place bids and asks and things like that. So taking a look at this chart, who can say that this is garbage? But anyway, they wasted all that money, $62 billion, because the currency is pretty much right back where it was, as weak as it was when they did that. Now, can they do it again? Sure, they can do it again, but each time it's probably going to have diminishing returns, and it will signal that they're scared, that they're in trouble, and that will just crash the currency even faster. So, okay, how about US 10-year? I should get all these things off. So let's go to the daily, because it looks a little bit better here on the daily. So we did have this, came back up here, but it did not get to the highs that we saw back in April, and has turned over with 2 significant down days here on yields. That means, of course, the price over the last 2 days has gone up. But again, in a recession, this is going to fall. And this should fall prior to recession, especially if we look at like the US 5-year. This should fall prior to recession, or let's do the US 2-year would probably be better. This should fall prior to recession, and that would be a recessionary signal. So like this, coming from a high of 5.25 down to over a full percent, down to 4.1. This move is what we expect going into recession. And so if this rolls over, we should expect this to come down. All right. How about oil? I've also been pretty good at predicting this oil price. Come on. And actually, do I have, what drawings do I have on here? And this is not my chart. Let me go to my chart real quick. And we'll go to US oil and see where my drawings are. All right, so this isn't as complicated as it looks. All right, we topped up here after the Russia invasion of Ukraine. Tried to get back to the tops, couldn't do it, fell this way. And people here were screaming about $200 a barrel oil. That's where we're going. 250, 300. They're making all of these lofty claims. But the point, it can't do that. Okay. The economy cannot handle the price of oil that high. It would crash all economies everywhere. So, we're at the end of a credit bubble. Global economic activity is slowing, and especially the rate of growth is slowing. And so the demand for oil is going to be falling. We've seen this in US numbers that have recently come out for gasoline, finished gasoline. The demand is very, very weak in the United States. So anyway, then tested this resistance point here, sold off, and that was the Israel-Gaza thing. It sold off actually into that. And then this Israel-Iran was the next peak, and it has been down ever since. But if you listen to people like Luke Groman or others, you would think that we should be at $200 a barrel oil like 3 years ago, and that's just not the case. Okay, we are slowing. This is a deflationary grind, and we're going to need less and less energy. I mean, just look at these green arrows. These are OPEC production cuts. They just met, or they're meeting right now as well, I believe. I haven't heard any news of what they've come out with, but I'm expecting them to continue with those same cuts. They could produce 5 million barrels a day more. They have in place 5 million barrels per day cutting production cuts. The U.S. could be producing more, but they're having to fight this, a hostile administration. So the world could be awash in oil, but it's only this high because of these production cuts. Okay, so that's oil. Let's go to one chart that's kind of giving me a little bit of a scare here. So I put this arrow in a long time ago. I think it was for my 2024 prediction. So going back here, I put this arrow in, and that we would peak somewhere around mid-May and then come down. I have not adjusted it. I thought that I should maybe adjust it later, but as it turns out, man, I might be missing this by only like 3 weeks if this does continue down. So pretty crazy that this has worked out like it has. But if we go into recession this year, we should expect the stock market as well. Well, the stock market should rally into a recession, but then of course we will have a sell-off when recession, is imminent. Okay, let's go to another thing that people are talking about quite a bit, and that is copper. Copper has rallied very strongly. Let's go to the weekly. I don't know what all these arrows are for. Let's take that off. All right, so we did hit a new all-time high in copper. Copper reserves in China are off the scale. I mean, they're highest ever. It looks, people are looking at that and thinking, oh, they're preparing for war. That's possible. I've reported on that recently with them stockpiling all sorts of resources, including soybean, wheat, and other things, not just copper and oil. So they're stockpiling all these resources that they are very reliant on importing. Copper being one of them as well. But over the last 2 weeks now, we've come off of the highs pretty substantially. Let's measure this out. Okay, my drawings are going to come back. So we're 12% off the highs. So that is a pretty substantial move, and we'll see where that ends up. I also heard that they were selling some soybeans. So they stockpiled a bunch of soybeans for like feeding their pigs and stuff, feeding their hogs, because they are, the largest consumer of pork products. And then there's been low consumer demand for pork, actually lower than they thought there would be. Maybe that is because of their population decline. Maybe that is because of economic hardship and people just can't afford to buy meat right now or something like that. But instead of letting all these soybeans go to waste, they are exporting them. So soybeans and some of these other things, they might turn into exporters, actually. I think that it's possible that they're preparing for war, stockpiling in preparation of something with Taiwan. Or it could be simply that they aren't using it. Their economy is so bad that they're not using it. We don't know. All we know is what they tell us, right? And do you trust the CCP? First off, remember, they measure their GDP differently. We measure our GDP in all Western countries, major economies. I can't say every single country does it this way, but the standard is to measure output, right? So what do people spend on, like consumer spending, investment, government spending? Like we have these. That's what we measure. We measure output or spending, and they measure input. So how much did we spend building these infrastructure projects? Well, you spent what you dictated. So if the Central Politburo dictates we want your investment to rise by 5% this year, now the Chinese regional governments have to find a place to build to actually make that GDP come about. And so they go out and they build bridges to nowhere. They build high-speed rail. They build all of these things. And so their GDP is measured by what is dictated. Now, the big difference there is, yes, those bridges and those high-speed rails and all that stuff was created, but what is the return? You're just building that to build things. You might as well dig holes and fill them back in. It's actually worse than that, because you have to spend money to maintain all of those fancy bridges and all the fancy trains, and they're all running at a loss. So anyway, getting back to the commodities and the resources, they could be just not using them. So they have a certain amount that they need to import and to meet their government quotas, but the businesses just aren't using them because nobody's buying anything, because their economy is slowing down, and that could also be the case. So anyway, that is that macro stuff. Let me check my notes. What else do I want to talk about that? But so the rise of copper prices and the rise of some commodity prices, because I've seen a lot of people talking about, this is going to be the coming commodity super cycle. Well, the problem with that is, okay, this gets to the heart of the matter about my disagreement with the mainstream or the consensus, like FinTwit or even Bitcoin consensus view of money and what we're dealing with here. So I don't think that all of this government spending is actually quote unquote inflation. Yes, prices can rise, but it does not lead to a rise in the money supply, depending on how you measure that. If you measure total money supply, like not just M2, but you measure all of the cash and cash equivalents in the shadow banking system, which dwarfs the M2, we have not had a big increase in the supply of money. So if commodity prices are going up for other reasons, like China stockpiling copper, or Iran and Israel having, going to blows or whatever, that's not a money printing reason that prices will go higher. And all that will do is hurt the consumer. So how is the consumer doing with these higher prices? If there was inflation, requisite inflation that caused these higher prices, consumers should be able to keep up with the prices, right? So you print money, people get the money, and people spend the money, and prices go higher. Yes, I know there's a Cantillon effect in there, but these are everyday items that people are saying are going up in price. So if the prices are going up, the people already have the money, so they won't get hurt as badly. If prices are going up, yes, their savings will be eroded, and they'll have to continue to get wage increases to keep up with that. But they won't be feeling the pinch as much as they are right now. They won't have to cut back necessarily on discretionary spending because they get more money. They get the more money to spend in the economy that makes the prices go higher. So anyway, let's go to some other things then here. I wanted to go to this one, Bitcoin Magazine Pro. recession risks rise. I wrote this last week, and I talk about Target and Walmart, very concerned about the health of consumers. Recent reports from major retailers, Target and Walmart, underscore the financial strain that customers are experiencing. Both companies have announced significant price reductions on essential items in response to declining consumer spending and increased financial hardship. Target has lowered prices on approximately 5,000 frequently shopped items, including groceries, household goods, and personal care products, aiming to alleviate the burden on cash-strapped consumers. I mean, that's not why they're doing it, to alleviate the burden. They're doing it to uh, to protect their bottom line, right? They don't want to crush the consumer. They want the consumer to be able to spend. Okay, similarly, Walmart has rolled back prices on 7,000 grocery items to boost food sales and retain low-income consumers who are increasingly turning to discount retailers for their shopping needs. Okay, so that's what I wrote last week. And then we had this one come out this week. And this is Kohl's stock plummets more than 20% after massive earnings miss. Another major retailer in the United States. Kohl's shares plummeted more than 20% Thursday after the company posted a surprise loss per share. All right, let's scroll down here. Where was this? So far, these efforts have not shown up much in the numbers. Kohl's reported a net loss of $27 million, or a loss of 24 cents per share for the first quarter, compared to a year ago profit of $14 million, or 13 cents per share. Net sales decreased 5.3%. So we have Kohl's, we have Target, and we have Walmart cutting costs, missing earnings, showing that the consumer in the United States is not doing well. So that is what I wanted to talk about that. So we are probably going to go into recession. My call is still for recession starting later this year. It's possible that we are already in recession, but recessions are always hindsight. They won't even make it official until quarters later. And then for years later, they might be revising GDP. So we don't really know. It feels like a recession right now, but things could be getting drastically worse in the coming months. All right, let me check the chat and see what's going on. What's up, John Delaney? The most important question here is, what is going to happen with Trump and the election? One cannot have any opinions on markets if this question is not taken into account. Yeah. I mean, we were talking about this on Telegram today. If you guys want to check out the community, it's t.me/Bitcoin and markets. So my concern is that there will be something funny going on with the RNC, or the Republican Party, and they won't put Trump on the ballot because they'll say, oh, we can't have a felon on the ballot or something like that. Or the sentencing is going to happen on July 11th, and the RNC is on July 15th. So do they put him on house arrest, and then the RNC says, hey, you have to be here actually to become the nominee? And so there's just a bunch of questions that I have for that. I don't know if they would go that far. It started looking in recent months or recent weeks that they were starting to fall in line, even Nikki Haley endorsing Trump, which I never saw that one coming. So, we'll see where this goes. Biden will likely really try to push gas prices down into the summer. So that could push off some recession. He's giving some debt relief, obviously, to the college student loan people. That's very unpopular. And actually, I can't believe they're actually doing that, because a lot of the lower income people that might have problems paying back their student loans, they're going to Trump in waves. And the kind of rock solid core of the Democrat Party is college educated, right? The elites. And they might look at this and be like, hey, I still have $150,000 in student loans, but I'm a doctor, or, whatever. So I can't get that forgiven. That's not fair. maybe some suburban moms that's still paying their student loans, they're not going to get forgiven, and they're not going to like that. So anyway, I thought that it might not be a big move for him politically. What else? And then, so yeah, some of those debt forgiveness and stuff could bolster the economy going through the election. If that is the case, then just kicking the can down the road to next year in 2025. And we have talked about that as well on Telegram. That's possible. It just feels like we're slipping right now, and it's getting much worse at a more rapid clip than it was, say, 2 or 3 months ago. So anyways, what's up, Dex Invictus? Let me check Telegram, see if they have any comments. Nothing in there that I'm seeing. You guys could be on a different thing. On Telegram, just put it into the post for the live stream and I'll see it. Okay. So that was that. Where are we going now? We are going to go to, before I go forward, here's some other stuff about recession level things. This one's out of course, Zero Hedge. Chicago PMI came out today, and it craters to depression levels after unexpectedly slumping last month to 37.9. Okay, do you guys know how low that is? 37.9. That's level is 50, and that's level month to month. So if you have, like, say, a 40 and then you have another 40, you're declining off of the already declined point, right? So a 37.9 is extremely low for a PMI reading. Chicago PMI index cratered even more unexpectedly in May when it defied hopes of a rebound to 41.5 and instead tumbled even more, sliding to a cycle low of 35.4, which was not only below the lowest estimate, but was staggeringly low. To get a sense of just how low, the last 2 times it printed here was during the peak of the COVID and global financial crises. Look at that. I mean, this is not good. Not good at all. PMI is, manufacturing. And this is Chicago PMI, so it's coming from the specific area, I guess, of the country. They also have Empire State. They have Texas. I think they have some other ones. But yeah, this is recessionary news. Okay, that's all for the recession stuff. Let's go to, which one do I want to go to first? Let's do this one. Okay, so CoinGlass, they have a Bitcoin exchange balance of all Bitcoins on exchanges, and they have changed this formula recently. But I mean, when you guys see this, you're going to be like, what the heck? So where should we go? Let's go right here. So this is right about the launch of the ETFs. See, like January 10th or January 11th. The Bitcoin on exchanges rose for the first couple weeks. Then it went sideways for a little while. Then it started coming down. And the Bitcoin on exchanges started getting sucked up by these ETFs. Then we approach the halving, and the halving happened right here at this area. And then the amount of Bitcoin on exchanges went sideways from there. Then we had a big dip here on May 14th, started coming down. Then May 26th was just, when was that? Sunday started a avalanche of Bitcoins off exchanges. Boom, we lost some there on the 26th. Then boom, on the 30th yesterday. And boom, today, it's even lower. Let's zoom in on just this section. I mean, look at that. This must have been the Kraken withdrawal that happened today. But just a stair step down of people withdrawing Bitcoin from exchanges. Now, this is incredibly bullish, in my opinion. Some people will say it's not, but to liquidate your Bitcoins, you have to be on the exchanges. So if you're taking the Bitcoin off exchange, that is quite bullish in my opinion. So here is the Kraken withdrawal. And you can see this big red line, $1.6 billion in one day coming off of Kraken. That's huge. Huge. People are setting up for something big. Okay. And then I have another one that I want to show you. Now, I usually never show this site or use this site because it is from an enemy of Bitcoin. This is the old blockchain.info that turned into blockchain.com. They still take, do a lot of metrics and things. But take a look at this spike. Can you guys see that? Let me zoom in here to 3 month. And you can see this spike right here in blue went up to $25 billion in transaction volume measured in USD. And that happened on May 27th. I haven't seen this reported anywhere. It might be a glitch. Okay. It might be a glitch on this website, but I was looking at this today. I was like, holy cow, that's an all-time high. The previous high for Bitcoin transaction volume in a day was here, 20 billion. And this one that happened just this week was $25 billion went through the Bitcoin network in one day. Something's being set up here, okay? And this is the 27th. Remember, that happens right after, where was it? Can this come back? That happens right after this first withdrawal right here on the 26th. So there's a lot of value being transacted here. Pretty crazy. Pretty crazy. Okay, and then what else do I have? Oh, okay. That's it for the crazy on-chain stuff. Let's go to my post that I put out yesterday and talk about some cosmic Bitcoin charts here. So this went out free, bitcoinmagazinepro.com. Usually my stuff is behind a paywall for them, but this one went out free. And the title, Unstoppable Bullish Fundamentals, Bitcoin will follow soon. While the price of Bitcoin is still caught in its multi-month range, things are only getting more bullish in the fundamentals. In today's post, we'll walk through the emerging Bitcoin voter demographic and how it is being courted by both sides of the political divide. Then we will move into ETF inflows, resuming following the 13F filing deadline on May 15th. Finally, we get to some exciting Bitcoin charts. Okay, so we'll zoom through this. You guys know what's going on with Trump. But very interestingly, hold on, let me check something. I think I might have messed something up on the other thing. Yeah, I think on the post I made today for BM Pro, I think I messed something up. But anyways, yeah, he said perfect saying whatever he said here was written by somebody that really knows what Bitcoiners want to hear, because this was pretty much perfectly stated. Showing the large Bitcoin electorate, about 20% of people own Bitcoin, or 17% of people own Bitcoin. That's according to Grayscale. Biden is also flip-flopping. He is reaching out to industry players to talk with them. We have the SAB 121 trying to get overturned, passed both House and Senate. Now on Biden's desk to sign to overturn that banks cannot hold Bitcoin for customers. And we have FIT passing the House, FIT 21. That is adding clarity to Bitcoin regulation and agency responsibilities. I'm not a big fan of this, but I've talked about this on the show very recently. This is just, it's a sign that they want to help, that they're pro Bitcoin at this point. And the often worried about attack on Bitcoin is not anywhere to be seen. Remember going back, I just retweeted about this the other day. Nick Carter's Choke Point 2.0. And where did that go? It's actually just the opposite. So, anyways, we all know about that, but this is a big Bitcoin demographic that both sides are courting. I kind of did some math and I figure it's about 30 million voters that they're going after. And a lot of these are one issue voters, so very easy to court them as well. Okay, inflows return to the ETF. So the spot Bitcoin ETF has experienced 12 consecutive days, and now it is 13 consecutive days of inflows totaling over 2 billion. This followed a period of 10 out of 13 days of net outflows. This very positive streak started on May 13th, right as the Q1 13Fs were rolling in. So, right, they started seeing these big players investing in Bitcoin, and then people wanted to follow suit. So the inflow started right as the 13Fs started to roll in. 13Fs show what large entities with over 100 million AMU own and are required to be filed quarterly. May 15th was the deadline for Q1 reports, and they started trickling in days prior. So you can see down outflows, inflows, and that happened right with the price as well. I wrote about these 13Fs previously on May 16th. And you can see here on this chart, positive flows returned and what happened to price. So there you go. We've only started to see the price response to the new positive inflows, and a complete 180 from politicians has not even started to register. Let's get into the charts and take some look at some cosmic charts. Okay, whoops. So simple moving averages. We have the 20-day I pointed out yesterday, and you guys saw here. I'll go back to the live chart real quick. Share this and bring this up, and hold on 20-day moving average. So we are going to close above this, it looks like, but we still have several hours till the candle close, 3 hours. So this is the 20-day moving average, and that's right where we are. All right, going back to this. So I pointed that out yesterday, and I said we have some support there. This is the cosmic part yet, guys. It's coming. Futures open interest. It recently broke 34 billion once again. And you can see we're back to near all-time highs of open interest, near all-time highs in price as well. But this is telling me that this is sustainable. Let's see what I say in here. The CME is taking the top spot ahead of the newish Bitcoin exchanges relative to CME. They're very new. This shows a significant maturation of the market, with established and highly respected traditional exchanges becoming the default market platforms for trading Bitcoin. The return to highs in open interest also speaks to renewed bullishness in market sentiment and the sustainability of recent price movement. So if we saw the price coming up, but we did not see a requisite increase in open interest, you would question that price rise more, Okay, consolidation and potential breakout. This has changed a little bit in just one day that it has been since posting this. But here's the ETF launch. We ramped up. Flows were flat, but flows became positive here again, and we're making a pattern to break out. That's all that I'm showing there. Okay, performance during election season. This is when we start to get a little cosmic here. So what I did was I highlighted Q2, 3, and 4 of election years. It also happens to be the halvings, as you can see here. So did the price react to the halving, or did it react to the election year? I mean, the halving has a pretty significant impact, but it does line up nicely with the election years. 2020 was a very good year. The election cycle saw an increase here back in 2016-17, but the real explosiveness came after the election, and you can see that. So where are we going here? Most likely this is going to be going higher on this quarterly chart. We should see 3 consecutive bullish quarters, and we've already seen 2 consecutive bullish quarters and then 2 before that. So I mean, this is a very bullish period here for Bitcoin that we're coming into post halving and during the election cycle, where Trump has said that he is taking on or he's promoting Bitcoin, and Joe Biden looks like he's being forced to do something similar. Okay, here is a parabolic pattern. If Bitcoin breaks out higher from here, its massive parabolic move is intact. This weekly chart shows a long-term uptrend and suggests that the coming weeks are likely to be highly volatile and positive for Bitcoin. The parabolic trajectory indicates that we could see explosive price movements as the market continues to recognize Bitcoin's strong fundamentals. So that is just a nice clean parabola curve going up. And so we could see some major price moves over the next couple of months. Continuing down here, quarterly chart showing explosive potential. The quarterly chart both illustrates that each time Bitcoin sets a new quarterly high, a new quarterly high close, the following 6 to 9 months have historically seen explosive upside movements. This pattern is repeating itself currently, indicating that we could be on the verge of another significant rally. The breakout to a new quarterly high close suggests strong bullish momentum and a likelihood of continued price appreciation. And so you can see here, when we cross this previous high, quarterly high, that is it. That's the trigger. Bam, up, bam, up. What are we going to do here? We still have 4 weeks-ish left in this quarter, so I'm suspecting that it's going to be positive. June is probably going to be a very positive month, and going up from there. So those are my cosmic charts. Let me go back to bitcoinandmarkets.com and then check and see what you guys, anybody in the chat. Dex says sounds bullish. Yeah, so I'm bearish right now. I'm bearish on the economy. And what does that mean for Bitcoin? Well, in this setup, we have Bitcoin is an inflationary hedge, inflation hedge. It is also a deflation hedge, because deflation hits and is contagious because of debt. Because people can't make their payments, they have to default. Now the bank gets in trouble, and now the other bank that is owed money by the bank that's in trouble goes under. Then the repo markets seize up. Interbank lending seizes up. The economy starts contracting even more. People can't make more loan payments, and on and on and on. It's all counterparty risk in a deflationary recession or depression. But Bitcoin doesn't have counterparty risk, just like gold. People have been saying that about gold for decades and decades. So Bitcoin is a hedge against deflation as well. Deflation and inflation. Now, is there a possibility that we have something like COVID, where there was like this singularity and everything fell? Oil went negative, remember? Yeah, it's possible, but I don't think it's likely. They could do something like completely pull something with Trump, and it just crashes markets instantly in some sort of singularity event. That's possible. Knock on wood, nothing like that happens. But most likely what we're going to see here is a grind down, slowing down, and eventually the economy will be in recession. The stock market will start to realize it, and we'll have a crash in the stock market. But it's not going to be like everything all at once. All right. Bonds will rally. Safe havens will rally. Bitcoin and gold should rally. So overall, this is a good setup. Now, if they can successfully push it back to 2025 before something like this happens, then that would be good for Bitcoin. It could just rally all the way through the beginning of next year and complete the cycle high, and then sell off. So that's what I'm kind of looking at. All right, let me see if Telegram has anything. Telegram, where are you guys at? No comments over there. Okay, well, let's see how many people are watching. It's 334 people watching it, probably most on Twitter. So what's up, guys? I'm going out on YouTube and Rumble and Telegram, as well as Twitter. So check all the links in my pinned tweet, and you guys can go over there and like, comment, and subscribe. Appreciate everybody that does that, trying to get to the monetization level for the YouTube. What else? That's it. Have a good weekend, guys. I'll see you on the next one. Bye.